Hello, everyone. Welcome to today's live session to finish up the week, see where markets are. Let me just put the risk warning out while I'm talking. I think we'll start off with stock markets today because we are seeing, I think maybe something of a stronger finish. It seemed a little bit directionless, I think, towards the beginning of the week, but we are seeing in the out of hours market, US stock markets a little bit stronger. So we'll start off with those. We'll look at the other markets as well: the euro, the pound, gold, oil. I think we'll take a look at silver as well because we looked at that last week, and I think it's got interesting again. We'll take a look at silver, and but we'll start off with the stock markets. So I think that risk warning has been up long enough. Just a quick one. To never miss out on these things. We do these normally every day. We try and do them. We do send out a push from our app now and again, but I don't want to overload people with push notifications. So the best way to never miss out, if you're watching on YouTube now, if you're not subscribed, if you click the subscribe button and click that little bell next to it, then YouTube should send you a push whenever we go live or upload new content. So we put up a pound US dollar video yesterday, sort of a 5 minute, bit more in depth look at the pound. So that's on our channel. It's proved to be pretty popular. Let's start off though with stock markets. Let's look at the Dow. So we'd had, if we take it back, let's just look at this week so far. We'd had a bit of a middling week really, where the market had been drifting off, but we are so far today gearing up going into today. You know, we're seeing the Dow quite a bit higher, I think, than where we finished last night. What was the close last night? About 25,900, and it's currently trading just below 26,100. So we're back up to the highs from earlier in the week. It had felt like it was drifting a lot this week, but we'd seen these old lows stop any major weakness. But I think what's interesting with stock markets, I mean, just to recap really what I was saying yesterday, you know, we've seen this massive V-shaped recovery in stock markets since Christmas. I wouldn't have expected markets to have come back like this in the first couple of months of this year, you know, considering the gloom that we had in the last quarter of last year and just the massive sell-off we saw in December. And it's taken a couple of months, but it has claimed back pretty much all those losses from December. It's been quite remarkable, I think, the move in stock markets. And I bet it has wrong-footed a lot of people who are maybe looking to sell short and the market's just carried on higher. But it's really interesting now for March, first day of March today. Happy St. David's Day to any Welsh viewers. But we're back up to levels that were a real problem, you know. So I think March is going to be interesting for stock market. So for the Dow, I think 26.3 at the highs from November. If we go through there, it looks like we're heading back to the all-time highs, up at 27,000. So I don't think it's going to go sailing through these levels up here. So I think we could well be in for a bit more volatility, a bit more back and forth in markets. But we're going into today pretty strong. You can see just how overbought this market has been because of that massive bounce back. The same way it went really oversold in December, but carried on falling. It went overbought, first of all, more than a month ago when the Dow was just below 25,000. And of course, here we are 1,000 points higher. So I think this is an important lesson. You know, I don't talk much about the indicators. I'm a big fan of trading off the price action, support, resistance, and trends. But I know people like to hear about indicators, which is why I have them on the chart. But you can see just how overbought it's been. And I just think maybe we're going to see markets start to struggle. We'll have a bit more up and down movements rather than just up every day. But let's have a look. Going into today, let's have a look at some of the levels. So I think the obvious hurdle is this one from 26th of Feb. So 3 days ago, the market pushed as high as 26,160, I think is an obvious one to watch. So only about 60 points higher than where the market is now. Okay, so that's, I think, maybe the first target on the upside today. On the hourly chart, it is looking overbought on the shorter term RSI, 10-hour RSI here. Let's watch that level. So again, I think if you really wanted to go short this afternoon, for me, I'd be looking to put stop losses up above here. And I think if we take that level out, The obvious target is going to be the 25th of Feb highs up at 26, 250, 260, that sort of area. If we did see a bigger sell-off this afternoon, obvious levels. Look how well these lows around 25,880, 25,900 have done this week. 27th of Feb, low. It was the low on the Feb 28th, and it was the low actually in the last hour yesterday of official trading between 8 and 9. So if we did see the market sell off, 100, 150 points, I'd be watching to see how it reacted down here to see if we see the buyers come back in again. But that has been big support, and then we've got even bigger support out here. So the momentum in these markets is still positive. It's still going up. I'm just wary now. We are getting back to these old hurdles from last year, so it could make things a bit interesting. But going into this afternoon, it all still looks pretty positive. Let's take a look at the DAX. The DAX is a really popular market with clients. The DAX, it's probably, I think it's the most popular stock market index with our clients. And I think because of the volatility, even on a relatively quiet day, you get some good moves. And at the moment, with it trading at 11,660, the German index, just to put this in perspective, here we go. We're the highest since November. So the DAX, like the Dow, we have these levels, and we're pretty much on it now. November highs were, let's round it up, 11,700. Okay, so we're about 30 points below that. Then after that, we've got the October highs, about 11,850. So the DAX, like the Dow, still strong, but if it's going to start, sentiment's going to start changing, we're getting pretty near these big levels. What's happened today? I think it gapped higher today by the looks of it, didn't it? Let's just flip it over to a 5-minute chart. There we go. So our DAX closes at 9 o'clock when US markets close. So closed about 11,525, then opens up again this morning at 7 o'clock. So it gapped up 75 points, so dragged higher by what was going on in the out of hours US market, and it's carried on moving. So you don't see that many gaps really. Well, actually, we have the odd little gaps here and there, but that's a pretty big gap that we've seen overnight. There is a form of technical analysis called sort of gap analysis, and there's some people would argue that gaps always need to be filled. I don't think that's the case. If markets carried on going higher, there's no law that says the DAX has got to come back and fill this gap. But clearly, if we saw it under pressure this afternoon, the lows from early this morning, from 8 o'clock, 8:15 this morning, around about 11,580, I think is an area to watch. But it all depends on what US markets do this afternoon. But I think it's interesting, stock markets now. Let's have a quick one on the Nasdaq. Actually, we've not looked at the Nasdaq for a while. See what that's doing. I'm guessing that's doing pretty much the same as everything else. There we go. So the Nasdaq 100. So the market has recovered 1,200 points. So that is. It's about 20%. The Nasdaq has risen since those lows on Christmas Eve. And again, for the Nasdaq, we are bumping up from 7,200 through to 7,400. Could be a potential problem into March. Let's see what happens. So there's stock markets. Let's take a look at the currencies. So I think I have said, I think the video we put up yesterday on YouTube, looking at the pound ahead of Brexit, I think it was the question was how much more is there left? And I think, again, as I was saying earlier this week, I just think maybe the pound's got a bit ahead of itself. There's still so much unknown about Brexit. It has sold off the last couple of days, and like US markets, we have these big old hurdles for the pound running from about 135, let's say, down to 133.80, that sort of area. So there's this whole zone just above the current price that there was a real barrier last year where we saw the sellers came out. So again, for the pound, it wouldn't surprise me if we don't get any Brexit developments to see it continue to cool off a bit next week against the US dollar. But again, that could be a buying opportunity. The trend for this year, this is the low in January. Yeah, so if we were to plonk a trend line on there, let's just pick up on that. My eyes aren't working today. I can't see what I'm doing. Here we go. So, we've got our little trend chugging away since Jan. I think any weakness, particularly down to the low 130s, to a couple of 100 points below where we are now, looks like an opportunity, a buying opportunity. It has gone overbought and started to roll over. The RSI has not done too bad on the pound. This is a 10-day RSI, overbought here, overbought back here. So it's not done a bad job, and also on the downside as well, not a bad job of calling the turns. So it'll be interesting to see what happens if we see a bit more pressure next week. RSI unwinds itself. We get back down to the low 130s where we did have a bit of support left. Let's flip that over to an hourly chart. Where is it? There. So from the 22nd of Feb, so about a week ago, 129.65 was the low. So I think if we saw the market under pressure down to here, it looks like maybe a buying opportunity. Let's see what happens. So that's the pound. Euro, the euro again. I was long the euro, and I'd been long for a week, and it started moving yesterday. So I was cranking my stop up a bit, and of course, what's it done? It's run out of steam again. The euro just cannot hold on to recoveries. It's a very frustrating market to trade at the moment because we have such low volatility. The big level for the euro is 112. Okay, the lows from November. So at the moment, any weakness below 113, we are seeing buyers come back in for euro dollar, but it just cannot hold on to any recoveries. I mean, let's just take a look at this trend since the middle of Feb. It is still up, so I'd still rather be a buyer rather than a seller. Let's just pick up on that trend. There we go. Oh, did I not click on it? So we do have, higher highs, higher lows, all of that sort of stuff. Just about. I mean, the trend did look something like that. It has fallen out of the trend. But, we've got pockets of support, 130. There's support almost every 20 points, 113.60, 113.40, 113.20. But really low volatility. So I think the trend is still up. I still think there's a chance of it gunning to get to 115. But at the rate it's going at the moment, it's probably going to take till July to get there because it's only moving like 20, 30 points a day. It's a really low volatility market. If you wanted to go short the euro, if you thought, well, actually, this is going back to the 112s, you've got an obvious reference point. I'd suggest it's yesterday's highs. Yesterday's highs at 114.20. Stop losses above there somewhere. Looks like a good place if you did want to go short. Personally, I still think there's a bit more oomph left on the upside, but it's just lost all volatility in recent months and cannot really build on any rallies. So it's a bit of a dull market. Euro sterling, we sort of dip in and out of that now and again. Clearly, the euro has been hit against the pound this week because of that pound strength. But with the pound giving back some of its gains, we're seeing the euro having something of a comeback. And again, I think the aggressive trade here, if you thought the pound was overdone against the euro, the aggressive trade is to be a buyer with a stop under the low from, when's that? The low from Wednesday, around about 85.25, that sort of area, I think is the Wednesday low. So if you think we're going to pull back into the range that euro sterling has been in for 18 months, and I think that's a reasonable trade. We treat this move here as a bit of a false break. If it is a false break, the market shouldn't take out that 85.25 low. If that goes, we're with the risk of a bigger sell-off. There's maybe an aggressive trade in there. I must admit, it's not one I look at that often because it has been fairly range bound, but it's interesting. And then looking at the RSIs, we went oversold down here as well. MACD could hook over in the next couple of days and give a buy signal. I think there's a reasonable chance we'll see the euro squeeze its way back into the sort of the 88 area against the pound. So I think maybe that move a little bit overdone. Famous last words. Let's see what happens. And oil, gold, and silver. Let's take a look at those. What should we start with? And then, gold has come off. Okay, let's have a look. I must admit, I've not been paying that much attention the last 24 hours, but this is interesting then. So we're seeing a much sharper sell-off in gold. Let's just pick up on that. So this is interesting. This, for me, this could be an opportunity. I've been following this trend on gold now since August last year. 1160 was the low last year. It's been as high as 1345 this year. And it's selling off. I think the obvious target, if we're going to see continued recovery, is a push back up to these levels, 1360 to 1380. These have been a real problem going back to the summer of 2016. So I think if we started talking about gold at $1,400, that's far too ambitious at the moment. But for now, this trend is still chugging along. but it clearly had got overextended. We've had quite a run since November. So what's interesting, we'll have a look at all this price action in a bit more detail in a second. But on the RSI, you've been again overbought for a few days, finally rolls over, and the RSI, you can see it here, we are heading towards oversold. And in this sort of little bobbly uptrend, when we're getting near to the 30% line on the RSI, it's not done too bad a job in calling a turn. Okay, so I think this is interesting. I think for me, it would take weakness through 1240 to suggest this trend was changing. So for me, from a medium-term point of view, be looking to buy the dips. But let's take a look at where those dips can be. Here we go. So we saw 1320 had supported gold for a bit. We're now breaking down through that, and we are now getting into what had been pretty important support, and it's an obvious one. It's pretty much 1300. It's that sort of area. We can see it had been. If we go right back on the hourly chart, so early Jan, the gold price banging its head up against near 1300, couldn't get through. Then we have the old thing breaks through, and the old resistance becomes support, and we're now at 1306. I think this is really interesting. I think this makes it an interesting market to watch going into next week. Clearly, it is still weak, so I wouldn't want to be a buyer just yet. But I think it's one to watch next week. Do we see the buyers start to come back in for the gold price ahead of 1300? If we lose 1300, it looks like we're going to go back into the range, back into the 1275, 1290 range. But for me, I would expect at least some sort of reaction ahead of 1300, some sort of bounce off there. So there we go. So someone's asking. So in the short term for gold, clearly I think it's still under pressure, but let's just wait and see what happens. So it's going to be an interesting one to watch next week, a bit more interesting than it has been of late, but looking for the bounce ahead of 1300. Let's have a look at silver, actually, because I had a quick look at that before I came on. And I thought it was interesting, I think, from a daily point of view, from a daily chart point of view. Good, because I can't remember what I was looking at. I think I was looking at, let's see if I can do it. Because silver has been recovering like gold, but not quite as strongly as gold. And I thought it was interesting. If we were going to be pedantic, we could draw a downtrend on silver from 2013, the more gradual downtrend since 2013. So we're 5 years into that, when silver was at what, $25, whatever it was, an ounce, and then it's only been in the last, last month or so, it looks like it's breaking out, and it's one of those things where at the moment you think, well, is that actually breaking out of the trend? Because so I think there are a couple of ways of looking at this. If you thought these little flips through that trend line were false breaks and the downtrend in silver was still in place, I'd argue it's a good risk reward up here to go short. Yeah, so I'm not saying I think it's going to go down or up, but I think if you thought it was going to go down from here, then it's gone back to the trend. You should sell off. So the target, the medium to longer term target for that trend to continue, would be a run back towards 14, and the obvious place to have stops would be above here, above those highs, 1627, 1630, whatever it is. So it's interesting, I think, the price of silver. Personally, I think because the recovery is still going, like gold, I think it'd be interesting to see what happens maybe a bit lower than here, because we do have quite a bit of support coming in. And again, from what, 1520 through to 1550 on silver. But I think it's a really interesting one from a longer term point of view, because we've got that 5-year downtrend now. Is it breaking, or is it a false break? What's going on? So I think it's an interesting market to keep coming back to over the next couple of weeks. Personally, I think we might see at least another squeeze above 16. But let's see what happens with those old support levels. Okay, and finally, oil. Then I'll get into some of the questions that have come in. Let's take a look at the oil price. Where are we? 57.50-ish. So, I mean, we're ending the week on oil pretty much where we ended last week. Okay, what was last week? What was the end of last week? Was it the 22nd? So the end of last week, oil was $57 and a bit, and we're 57.50. Yeah, the excitement in oil this week was on Monday when we had that President Trump tweet. and we saw the sharp sell-off, bang, and we've clawed all that back, actually plus a little bit more. It's had another go this morning at pushing higher. So it has nudged through 58. So that is a new high for the recovery. But again, we haven't seen much follow through. So it keeps poking. This is back on the daily chart. So the price of oil keeps poking its way through to fresh recovery highs, but then we don't get any follow through. And I think, 58 to 60, I think could be potentially a real barrier for oil. So I think, again, it makes March an interesting month, because it's bounced back so much, like stock markets. Are we going to see it start to turn around? But in the short term, it's still strong. It's been a pretty sideways week, but clearly we're left with big support at 55, and at the moment 58 is being something of a barrier, but momentum is still strong. Yeah, so there we go. It's still positive, but has maybe lost some of its speed, I think, in recent weeks to the upside. So let's see what happens going into next week. So for this afternoon, stock markets, I think, are an interesting one to watch. See how they end the week. With the Dow above 26,000 in the out of hours market, and gold. I think gold. So again, it is still weak gold, but watching for a bounce ahead of 1,300. Let's have a look at some of the questions. Someone's asked for dollar Mexican, dollar against the Mexican peso. Well, that's not one we've done before, is it? Let's have a look. Did we cover it actually? Let's have a look. Dollar Mexican peso. Here we go. I've got no idea. So 19 at the moment. So $1 buys you 19 Mexican pesos and a bit. Let's take a look. It's pretty boring, I'd say. I mean, that has been pretty much sideways. If we went back to here for the last 2 years, isn't it? We've had this pretty big sideways range. Doesn't get through 21, and then the dollar buyers come back in, sort of below 18. And at the moment, it's trading at 19. So we're almost sort of slap bang in the middle of the range. If you had to do a trade here, I'd be a buyer of the dollar against the Mexican peso. Just because we've sold off back to support, got support at 18.8, bigger support at 18.5 from back here. So it wouldn't surprise me if we saw the dollar squeeze a bit higher. But it's been a pretty sideways chart over the last couple of years or so. What's that? Coffee Arabica. ISM predictions. I've got no predictions about. I never do predictions on economic data. I just wait and see what happens. So coffee, US coffee, Arabica, or whatever it is, spot. Let's have a look. It looks like a duff price in there, doesn't it? That is just the price of coffee is falling, isn't it? So the price of coffee, if we go how far back can we go? How much data we got? Wow. So we go back to 2011. So coffee was, I don't know, $3 a bushel or something like that, or a sack. I don't know how it's priced. So that was 3. It's currently trading at 0.96. So that is it's a sizable fall, isn't it? So it's lost. I can't even do the maths in my head. 2/3 of its value. Price of coffee in the last almost 8 years. And it's still trending down, isn't it? It's still trending. I mean, it had a go at a recovery here. I suppose if you wanted to be aggressive, the aggressive trade here on coffee, we've gone pretty oversold on the RSI. Although it has to say, it has not done a wonderful job in the past, really, of calling the turning points. The MACD is looking pretty depressed, but turning up. You can see the MACD histogram starting to tick up here. I suppose the aggressive trades is be a buyer at 96 with a stop loss either under the low from this week, or probably a better stop loss is under the low from September last year, and see if it's going to have a run back up through $1 and back up to maybe the 120s. So it's interesting. I mean, it's one I never look at, but it is an interesting market. But clearly the right side of the market in recent years has been to be short. We get these massive runs now and again, only for the downtrend to continue. So I suppose, yeah. And let's have a look. What's the spread like? What's that spread like? 97, 96.15. Okay. So commodities agricultural commodities tend to have much wider spreads than the traditional financial instruments. So let's say we're going to be a buyer of coffee at 97, and let's see if it can flip its way back up above $1. I suppose $1 is a bit of a what's it, psychological level, isn't it? $1. So let's see what happens. Let's come back to it. Any other questions I've missed? No, that's it then, I think, isn't it? Are we all done? So yeah, so stock markets this afternoon, let's see how they perform. Gold around about $1,300. Let's see how that one performs. Oh, I should mention as well, I think I mentioned it earlier this week, if you're in the UK at the end of March the 30th, we're just getting the web page together now. We're doing like a day free seminar with me at a hotel in Heathrow. We're just sorting out all the details now. So it's going to be, we're limited on numbers, but it's going to be free of charge when we talk about trading strategy and all that sort of stuff. But when we've got the details, I'll put the website in one of these live streams, so you can go and register. But if you're interested in coming along, we're doing it end of March, Saturday, March 30th, Heathrow, from 11 till about 4:30, and it's going to be free. Okay, that's it. That's it for this week, isn't it? So we'll come back on Monday, 12:30 Monday, see what the week looks like. Payrolls, of course, I'm assuming next week, isn't it? Next Friday, be non-farm payrolls. So we'll do the usual webinar over that. To find out more about the company, go to Capital.com. You can open an account, you get access to all the markets and the charts that I use for this. Have a look at the video we did yesterday, a longer term look at the pound. Any questions, leave them below this video or drop me an email. That's it. Have a good weekend, and hopefully see you on Monday.